All right, everybody. I want to do a pattern recognition series, and I want to help you guys understand volume spread analysis in its most intricate forms, as well as help you guys get your repetition up. So, one thing that was taught to me in my time as a proprietary trader, which I still am, was that we needed to familiarize ourselves with certain patterns in the market. We needed to make sure that we had seen at least 50 of each type of pattern, traded 50 times of each type of pattern, and that we could just ultimately look at a chart and just recognize certain patterns of behavior. So, volume spread analysis or tape reading does for us, it takes into account the spread of the bar, the body of the bar, the the spread of the body, also the length of the supply tails and the demand tails, the volume, and then the result. So an effort versus result sort of analogy there, like what's making what do what and how is that responding. So what I want to do for you guys right now is what I did was I'm in the bar replay. It's Sunday before the markets open. So I recommend doing this on Saturdays, Sundays before the market opens, so you guys can kind of refresh yourself and you get the opportunity to take these reps and do this a lot until you get really, 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 really comfortable with doing this, right? There's no way to get comfortable doing this without doing this, trying and failing. So we'll see what we have going on here. We're going to try to just figure out what's going on here based on what we've seen in the context of the previous trend. Okay, so without further ado, we're going to hop right into it. So, what most volume spread analysis books and teachings will tell you is you want to identify the very large and ultra high volume bars. Those show significant levels of activity. That sort of activity usually comes from the larger operators trading with the public or against the public. And that's what we want to see. Now, majority of these times, this is a very counterintuitive approach where you'll see this ultra high volume bar doesn't really create a crazy move to the upside. It actually ends up creating more of a downward movement, which is crazy, right? These ultra high volume bars, and a lot of people will say, oh, volume goes up, price goes up too. That's not necessarily true because when volume goes up in very, very, very massive amounts, that can also be indicative that there is hidden buying or hidden selling against the public interest. And that's what we want to take into account. So when we look at something like this area, we see that we have, if we were going to talk phases, phase A, phase B, the breakdown there, this would probably be phase C. You change your character through that move, and we got a gotcha bar here as well. But that's looking from a structural analysis sort of point, sort of standpoint. What we want to do is a bar by bar analysis and talk about what we see in these bars and why these bars are doing what they're doing to get a clearer picture of what it's doing right now. We want to see who's been operating this market, how they operate this market, and what their intentions are. And we'll see that through effort versus result. The effort is in the volume, the result is in the price bar and the following and subsequent bars after that. So just really quick, I want you guys to see this, what we call a mushrooming over of price, where prices create this rollover effect. And we've got what we call a gotcha bar. This is part of my strategy, which was part of a strategy that I got from a trading group out of Gibraltar in the United Kingdom. Very smart group over there at Trade to Win. Those guys are awesome. And Roman Magamazov and the Wyckoff Trading Group, the WTC Trading Group, for the bar by bar analysis. So these are things that I'm refining and I'm adding onto my strategies. that I use at Maverick. So I want to be able to give you guys this. This is a great tool to help you. The bar replay, finding that random date, and then doing this bar by bar analysis. So to try to make this really quick, we can tell that there is a distribution going on here. As we look at this price bar, we want to pay attention, and I'll go ahead and map out the ones that just draw my attention immediately, right? And then how my mind is thinking at this point. So a few things that I want to do is I want to map out what I can see. I'm not sure if my keyboard is on. Okay. All right. So this is what we're seeing here. And I just want to map out these two ultra high volume bars, the extension to the downside. This is showing the initial hidden selling in this market. As prices came back down, we want to pay attention to how it breaks out. Now, this breakout didn't have very much follow through because it fell right back into the range. And if we're looking at how these lows have started to increase, and then all of a sudden they were broken here and then broken again here, it shows that there's downward pressure pushing that market, because if this was bullish, we would have pulled back, found some support, and started making higher highs. But that's not the case. So we can say that that is some hidden selling in that bar. Massive spread, massive volume, the highest volume. The close just met this high, large supply tail, short demand wick. The spread of this bar was very widespread. Okay, spread body widespread, effort versus result, lack of follow through on the effort, diminished demand on the way up. So we did not expect prices to continue up for very much longer, but we would have known that this would be phase A of that distribution as it carries itself out this way. Okay, so now as we get to this bar, we can see this is more like a kangaroo tail, like we talked about in previous lessons, right? Very long upper shadow, upper wick, very short lower wick. The body of that bar is very narrow. Prices attempted early in the session to go up and break out, but they ended up closing within the boundary of the previous bar. And then we have a very turbulent bar that breaks us down, and then we continue to go down from there. So this is not buying, even though this is a green up bar. As you guys can see, even though it's a green up bar, it is actually buying. As we look at it here, we can see that the close is closer to the lower 80% of that bar, which shows that there was massive selling in that market. So all I wanted to do there was just understand the driving force that's behind this market, because we got to understand this is like a wheel and a hub sort of thing, right? So the direction that we spin the wheel is the direction that the wheel is going to continue to turn until we find some force that opposes that and causes it to turn in the opposite direction. Okay. There has not been any climactic action that is stopping this downward trend. Okay. That's analyzing those two bars. Now, as we get into this upward trend channel, what we want to look at is how much supply is still present in this market, because it seems that from this area to here, supply has diminished substantially. And we even have some ultra low volume in some areas down here, right? And this is an ultra low volume up bar that has created an upward movement, which just shows that supply had exhausted at that point. Shows an exhaustion of supply. Now, this is the fun part. Okay, let's look at the market and see what the market is telling us. This is something that Wyckoff did a lot, and this is what we'll call a swing analysis or a thrust analysis, and we want to see if there's any shortening or extensions in thrust in the market. So a way I like to do it is simply by using the drawing tool. You can use the drawing tool to essentially measure the the price move. Now we can quantify these price movements as well by using the price range of that bar. So you can see it's about 7.86% is that up move. And the down move here is a very short move to the downside. So as we contact the supply line, the amount of supply that introduced itself was less than the amount of demand. We can clearly see that. So now as the demand comes back into the market, here, just comparing the two, we can tell that there is similar price action there. And there's another tool that you guys can use that's a little bit cleaner than this. As a matter of fact, I'm going to use it. Shout out to Elise Amarez for this one. She showed me this way, way, way back in the day. And it is the bars. As soon as I can find it. There we go. The bars pattern. So we'll start here and we'll grab to here. And as you guys can see, now actually what I'll do is I'll do this, right? Because now that's closer to what it really is. So here, we just want to measure and see if those two patterns are getting longer or are they getting shorter. Okay, so there's those bars there. And then we'll map out these bars here. Okay, so here we can see the amount of downward pressure, the amount of upward pressure. I'm going to redo this one. As a matter of fact, I'm going to clean this up just a little bit. Right, so now we've got a more accurate analysis there. So here we've got the upward move, like we said, about 7.85%. We got this downward move. This move here is similar in size as this previous move. However, you guys can see there's a little bit more fight to this. It doesn't go straight up and down like it was. And then when we get to the rejection, we can notably see an increase in the amount of supply that has introduced itself into the market. Now, reading from these areas, again, about the same amount of demand as we reached up into that area. But what I want you guys to really look at, the key to this is understanding whose dominating force has gained strength. So if we say that this is just as long as this is just as long as this, but the supply has increased each time we've come in contact with that supply line. You guys see that? So if I was to highlight this area and move this around, right? And if I was to highlight this area and even this area, what are we seeing as far as the supply? Supply has it gone up or has it gone down through time? Supply has increased through time. And as we pull up to right now on this replay, we can tell that the demand has now diminished. So from here, demand is actually weakening in comparison to the previous rally. So what we could expect is that supply should increase because now we can visually see that demand has decreased. It's decreased from here. It's decreased from, well, it's pretty much the same from there and here. But that from that initial movement, it's gone down a lot. Now, let's quantify it. So like we said, about 8% there. And this increase is about 6%. So we lost about 2% of bullish momentum. And from a bearish aspect, we're at 5, -5 there, and then -4. So we've increased by 1% to the downside. Here we have a nice run, nice turbulent run into this support. And the last time we had 3 bars back to back that were this bearish was off of this initial move when supply was exhausted. But here we can see that supply is no longer exhausted and it's actually picking back up. So again, let's look at this relatively high volume bar, right? Narrow body, large upper shadow. Prices did drive up into it, but the follow through was not there because we broke down below that and also manipulated the low. As we came back into the range, these up bars and these lows were going progressively higher until we got to this point. Okay? Now from here, we've got a very turbulent move to the downside. And here we have, this is where bar by bar analysis really comes into play. Let's read these last 3 bars. So the turbulent move to the downside shows impulsive selling. Here we also have another impulsive move to the downside, breaking the previous low, closing at this low, and we're trying to break down below this low, which we were able to do, but we did it on diminished volume, and that shows sort of an ease of movement, but it also shows that there's likely to be some sort of reversal action here because supply is diminishing closer to this demand line. So what we can expect as I click through this bar replay from here is that there should be a slowdown in the amount of supply. However, what we can expect coming into the rest of this move is that, dang, I just want to delete this one. There we go. What we can expect coming into this move is that price should, if it continues to be analogous to what's been happening, supply should be either equivalent or extend more than this previous movement because demand is diminishing and supply is increasing. So, but here in this bar, we see diminished supply, which gives me an inkling that prices may turn around from here. But that's not a bad thing because we could potentially get an entry. If we fib that engulfing, we have a 61.8 entry. We have a previous close. Because they like to use this previous closing price. This is an axis point for us. This is the most recent axis point where prior demand turned into supply. Okay, so it's like you just walk through a revolving door. So now coming out of that revolving door, remember the major move at that mushrooming effect, the gotcha bar, and the breakdown behind us. So that's distribution and heavy selling pressure on top of the market. Here we have a similar effect, but in a smaller context where we have that same sort of scenario. So what we expect, a pullback. 1, so we can get a better entry. 2, because we can see the diminished result, right? The lower effort, lower result, which gives us, you know, not the warm fuzzy that this is immediately going to continue down. This is two back-to-back down bars here, which is a good sign. When I see two back-to-back down bars, that makes me want to draw a fib. So you just fib that whole bar, that whole engulfing bar from the high to the low. And that lines us up really well with the 76.4 here and that axis point. So what I'm gonna do is how I feel. I think we've already judged that this is no longer an upward float and more of a a distributive move. So we're gonna come here and remember, like we said, we expect price to extend just as long as the previous extension, if not more. And this lines us up with this area here. And we do expect it to come down just a little bit more, at least to these lows. Okay, so this is how I feel about this. We'll read each bar and see how we feel. If this doesn't work out, it doesn't work out. No skin off my bones. We'll just get back in long and wait for them to break the highs, pull back with a major backup, and then we'll get in there with the sweet spot move. But right now, sort of thing, right here, right now, this is the type of setup I would do. So as we click through and play the bar by bar replay, oh my goodness, that was super fast. Probably did that a little bit slower. But yeah, shoot. As you guys can see, we had the manipulation of those highs. Stop loss was set above here. The previous high. Prices immediately checked us, right? After this bar, we had a very low volume up move, which shows ease of movement to the upside, where we could expect the prices were going to continue up to that rally. When we got to our point of interest, right, that axis point, who came back into the market? The supply did. Relatively high volume, relatively large spread that matches, close below the previous close, large bearish shadow on this bar. Bearish bar, closed below the previous lows, closed below the supply line. Prices increased here with ease of movement. This is almost a lack of demand, diminished spread, diminished volume. Prices continue to accelerate again on ease of movement. Now, this bar here is giving me some signs that prices, like we said, diminished supply on this, the small spread, small body. The demand tail and the supply tail are both present, showing that both demand and supply in that bar. Now we have an slight increase in volume, increase in body size, a close above that one. I do believe prices will float back up. Now we'll read that float. Remember, we have another axis point here, which would give us another potential move like this. If we think that this is going to fall out of here, I think we may pull back into this area. Each of these rallies was only a single bar rally so far. So this bar potentially may be all that we have. We may see a couple more bars as we reach up into that area, but there is no climactic action that wants to get me out of this trade, especially with how beautifully we got into it. So playing back next bar. Okay, next bar came up. We tagged in to our 76, 78. We got a rejection there, which would keep us pretty safe in this regard. Stop loss would have been the previous rally on that one if we were going to leg in a position, but still nothing. Well, we do have an increased volume, increased spread, but increased supply shadow on this bar. Okay, we closed about 50% on this bar, so the forces at B are basically equivalent. So we got to see who is in this market, but this isn't enough climactic action and not enough. Well, selling may have dissipated at this point, so we just want to see what this next bar does for effort versus result. Okay, prices came back up out of this bar, and immediately fell back below. Let me get rid of this one. So still no reason to get out of the initial trade because prices are still doing just fine. As we read these three bars, this bar actually has the least amount of volume, which would show an ease of motion, but also a diminishing demand. Here we can see supply increased. We close below that bar. Increased supply still looks good. Nothing telling me to get out of this market because it's still in our favor. Here on this next bar, we see that demand has entered the market. There's both supply and demand tails. The supply tail is a lot longer. Body of that bullish bar is compressed, and supply is not higher. And volume is not higher than the previous bar. So this shows that supply is still in control. I do expect lower prices. So prices have gone up again. More demand, more supply, more demand because prices closed above. This is two back-to-back up bars, but they haven't closed above the previous close. And every time they attempt to make it back up to this axis point and that negative 61.8, they keep rejecting that, right? And they haven't been able to close back within the previous high. And we can see these highs are starting to shorten a little bit, but still nothing that wants me, that's screaming at me, get out. No climactic volume. Here we go. We got to close below on analogous volume to this bar. Now, as we look at this, we can see that the volume has, the spread has gone down in this bar in relation to this bar. The wicks are both equivalent. This is more like a doji than anything. However, when we look at it this way, it shows that supply has overcome demand as we have closed below the previous bar. And that lets me know that supply is still dominant and we can see lower prices. Now look at relation to, again, the previous supply run. I'll just do that like that real quick. And we still have a little ways to go to that downside to meet that same exact amount, right? Because demand still hasn't, we just had a rally. So it still hasn't rallied quite like these rallies, right? We haven't seen any bars with this much spread or with that much volume. So I'm still going to continue with this downside move. Okay, perfect. That looks great. And prices did continue to go down, right? This down bar with ease of movement implies that we're still extremely bearish. Diminished demand, potentially an exhaustion of selling. We attempted to go below that previous bar, still not climactic. That last bar was not a, it wasn't a aggressive demand bar. Prices are likely to continue lower. Here we go. Boom. And that's what we got, bar by bar. Still nothing getting me out except for the fact that this is a TP smash, 300% gain. And this is on the daily on gold. So you guys can bet your bottom dollar that it's a 5.29% move on gold itself with negative 6,000, well, 6,749 pips. So if you put $1 in there, that's a $6,000 move on gold. Over how many days from the check to the close? 23 days in profit. Okay, so that's all I wanted to show you guys. Quick 30-minute video, bar by bar analysis. Hopefully that helps you guys out. Remember why this worked out the way it worked out and why we would have expected a movement similar, if not more, because of what the previous price action has shown us based on the amount of buying and selling pressure that was in that market in relation to other market movements, and then a bar by bar analysis from this point. So hopefully you guys enjoyed that. I'm Jay. I'm out of here. Peace.